Hi traders, so welcome back to another video. So let's discuss a topic which is is technical analysis going to make you rich? So this is probably one of the most controversial topic that a lot of people talk about. If I master technical analysis, if I have a winning strategy, then I can make money in the market over the long term. The answer is no. 90 to 95 of traders actually lose money in the market over the long term. Doesn't matter if they blow up their account within a month or over a span of 6 months or a year. Ultimately they will lose all of their money. That's because they don't have a proper discipline and risk management. So if we go to the chart right now, so some of you might be thinking, hey, how do I consistently extract such a big position? How do I consistently make such big profits? So if you refer to the previous 2 videos of mine doing my trade recap, making 75,000, making 27,000, etc., it's because I have a system that tells me when should I trade or exactly when should I not trade. Most people assuming, I'll give you one example here, they just don't have a system. They don't have rules in place that stop them from overtrading. Sometimes when they're looking at this chart, they'll say, hey, that's a long. They look at this and say, hey, that's a flag. I'm looking to go long. So the moment they go long and they get stopped out, assuming that's their entry, that's their stop, they get stopped out, revenge trading behavior starts kicking in. That's when they start taking more trades without having a clear plan. So this is what's really commonly happened among a lot of the students that I've coached in the past, and a lot of public as well, is every time when things go south, instead of limiting the downside, instead of taking a step back, they are actually stepping the pedal even harder. And that's what's causing them to say, hey, I'm risking 1% per trade, but how do I actually get into 10 trades drawdown? How do I lose 20%? That's because you're taking multiple losses on a similar setup. If right now you have a system in place that tells you that, hey, I can only enter position if the condition is like XYZ, if I have a checklist, if everything takes off, I take the trade. If I get stopped out, that's fine. I'm not going to trade anymore. If you have a system and rules like this in place, then it will ultimately stop you from overtrading and revenge trading. Okay, so another second example I can give you, if you go back to the chart, is, for example, right now you take a short position right here. Okay, assuming you take a short, beautiful entry, awesome, beautiful stop loss above the candle's high, and you're looking for a target like this, about 1 to 5 trade. And the moment when price starts chugging sideways, you move your stops to break even. If it sounds similar, just comment down below and let me know if that happens to you, because a lot of the traders that I've met, they actually just consistently taking break-even setup. I'm not saying that it's wrong to take break-even trade, but you need to understand, you need to have certain rules in place, certain checklists in place that tells you under what condition should I pull my stop to break even, should I pull my stops to positive, should I trail my stop to 1R, 2R, 3R. Because if you're constantly breaking even your trade, that is due to fear. Okay, you're afraid of losing that position. You're not ready to accept the 1% risk. You're not ready to accept that maybe $100 loss. Okay, for me, every time when I take a trade, I assume that that money is gone. Right? Let's assume I'm risking $5,000 on this trade. That money, I'm putting it aside. I let the market do whatever it wants. Okay, if it hits my stop, that's fine. I'm out of the market, because in the first place, you should be having your stops at a sensible area. Okay, I'll give you one example. If you have your stops at a nice sensible area, which is above the high, then ultimately if the market stops you out, you're wrong. But if, let's say, you try to squeeze your stops like this, right after you get pinked out, the market still have potential, still have low possibility that it will run even lower. They'll move into intended direction because you're not placing your stops at a sensible area. And that is exactly our third point. Most traders are not placing their stops at a sensible area. I'll give you one more example. So go back to our first point. What our first point? First point is actually most traders, they actually don't have rules in place. Okay, they overtrade, and then once they lose the setup, they continue revenge trading, overtrading. Okay. Second one is most traders break even their position way too often. Because of what? Because of fear. They're afraid of losing that position. They're not accepting the risk. Third point is what? Is most traders are not placing their stops at a sensible area. So remember all these 3 points. You need to put your stops at a sensible area that tells you, if I get pinked out of the position, I'm out. There's no chance I'm going in back unless I have a second entry, a second re-entry level. That is exactly what I do sometimes. But that also requires you accepting the risk. So I'll give you one more example here. Take a trade here, take a long based on buy limit. Your stops is so tight. Okay, right after you get stopped out, what happened? Market run all the way up. Why is it happening? Is the market trying to just tap you out? Stop hunt. A lot of people like to talk about stop hunting. There's no such thing. Okay, market doesn't really care about your small size. Okay, there are trillions of dollars floating in the gold market, forex market every single day. They don't really care about your position, your liquidity. Honestly, that is one very, very false misconception. So remember, SNR or support and resistance are a general zone. Don't take it as a specific level. If you draw your SNR like this, of course you're going to get stopped out. If you have your stops just right beautifully under the low, of course you're gonna get stopped out, because there's no such thing as perfection. The market will never come just tap your entry then just immediately run all the way up. What is the probability of that going to happen? Maybe 10% chance, 5% chance. A lot of times, even if you're correct, the market is going to just dance around your entry zone, then eventually still move into your favor. Our job is to identify setup that provides us the highest probability of success. Then as price move into our favor, we get aggressive with scaling in. That's our job as our trader. Our job is to allow our winners run and cut off our losers. Okay, then fourth point, it goes back to, is technical analysis really going to get you rich? Not really, because most traders, they are not respecting the risk. Fourth point is exactly risk management. All right, lots of traders, what they start doing is, it goes back to our first point, they are over trading. Okay, when you're over trading, let's assume you're risking 1% on a setup, but once you get stopped out, you start revenge trading 3 to 4 similar positions, 1% risk, 1% risk, 1% risk. Then ultimately you're risking 4% on a single position. Is that 1%? Not really. Are you managing risk? Not at all. All right. Risk management is not just about I'm risking 1% per trade. That is a standard risk per trade, which is the most beginner thing that you must know. That is such a beginner stuff. Experienced trader knows how to control himself taking a step back after experiencing losses. Good traders are what we call an extremely well risk manager. We know how to manage our risk. We know when to switch on our risk appetite, when to switch off a little bit, when to go aggressive, when to go conservative, when to not trade. That is your job as a trader. Identify market condition that you're extremely good at, then double down on that condition. When the market condition is not right, we take a step back. We step away from the chart. We don't trade. We practice. We backtest. We review. We journal. We do self-reflection. Right? It's not just all about trading. You don't need to trade every single day, but once you get some good opportunities, make sure you give them enough breathing room and make sure you ride the winners to the max. Okay, so I hope all of you learned something new from this YouTube video, and if you like the video, please don't forget to like, share and subscribe. Remember, always keep your risk managed. Trade safe, take care, and I'll talk to you next time. Bye bye.